to repair your credit, or what you can do to make sure your credit stays good. Obviously, you pay your bills on time, don't let loans go delinquent, don't pay bills late. Pay down your debt. Um, it's really important to have some room between, like for instance, credit card limits and balances. The one thing that really hurts your credit score is if you had a couple credit cards and you charge them, max them up to the limit, that will really take your score down. That's a big thing.
Yeah, they say to keep it 50%, so say you got a $1,000 credit card limit, keep it under 500 because it doesn't up your score then, or, excuse me, lower your score.
So in other words, if you apply for a new Kohl's credit card of 500 and you charge up to 500, that's bad. And I go, yeah, it sort of is. You got to ask for a higher limit then or something, you know.
Another point they used to say is if, you know, you had old credit cards to close them out. Now they're saying don't do that anymore. If you've got a credit card that you've had for a while, bring it down to a zero balance, but leave it open because there's a credit history on there. And if you start closing all those out and then you take new ones, like Bob says, it's just going to bring your score down.
Tip 3, periodically review a copy of your credit report. That's a good thing to do. On an annual basis, you can get a free credit report. Annualcreditreport.com, you can get a free copy of your credit report, but you're not going to see your scores. Then you can maybe pay $20 or some fee to get a score. That's not necessarily the same score we see. So it's because every company has their own little formula on how they make up these scores. So it's really not worth you spending the money to look at your scores.
The other thing is when we do application or pre-approval, we run what's called a tri-merge credit report, and it's actually 3 different credit bureaus. It's Equifax, TransUnion, and Experian. We take that middle score. That's what we have to use. So you could have a low score on one of the credit bureau inquiries, but that doesn't mean that's the score we're going to use until we run that tri-merge.
Real estate agent. Should you work with a real estate agent? I always recommend it on a first-time home buyer basis because what do you get to lose? That real estate agent is there to help you, and it is really not costing you anything. They're going to be your middleman. It's very difficult if you were to find a home that's a for sale by owner home, and you look at it and you really like it, and they're asking, you know, 109 for it, and you really want to pay them 100. You got to look them right in the eye and say, I only want to pay you 100 for this. You know, that's hard to do. Whereas a real estate agent is your middle person, your negotiator. 9 times out of 10, you hit it off with a realtor by going to open houses, looking at homes. A realtor might say, oh, what kind of home are you looking for? And they're offering to help you because they're going to be able to make money on the sale of the houses that they have listed by selling them to you. So in that case, it's not costing you anything.